Hi, my name is Vikiana. I am a realtor here in Atlanta, Georgia, and I am a brand new mom to an 8-month-old baby. So trust me, I understand how overwhelming it can feel whenever you're even thinking about buying a house, when your schedule is already full of changing diapers, you can barely even sneak in a coffee. So today I am going to be breaking down exactly how much money you need to buy a house so you can feel confident, prepared, and ready for your next move. Let's not waste any time and get right into it. There are 3 big costs that you are going to have when you're buying a house, which are your down payment, closing costs, and upfront expenses. So let's break those down one by one. You needing 20% down to buy a house is a myth, and it used to be true, but not anymore. Here are your options. With an FHA loan, you'll need 3.5% down. A conventional loan, if it is your first home, you can even go as low as 3%. If you're a veteran and you can use a VA loan, you can go as low as 0% down. You won't need a down payment. If you don't mind living in rural areas and it is your first home as well, you can do 0% down. And we also have Georgia Dream, which is a down payment assistance program. They can give you up to $10,000 for your down payment. I actually recently had a loan that closed with Georgia Dream, and my buyer was able to buy their home with under $2,000. It'll be a great option to check into it to see if it makes sense for you. Here's an example. If you're buying a house with FHA that is $300,000 and you need a down payment of 3.5%, you are going to need $10,500 for your down payment. Of course, again, if you use VA, USDA, those are 0% down, so you won't need any money for your down payment as long as you qualify for those as well. The second thing you will need money for, it is your closing costs, and this ranges between 2 and 5%. I like to average it around 3.5%. So again, if you need a house that is $300,000, 3.5% is going to be $10,500, and that is going to average your closing costs around $10,500. So you need 3.5% for your down payment and 3% for your closing costs. So right now we are $21,000 if you're buying a house that's $300,000 with an FHA loan. Of course, with your closing costs, you can always negotiate with the seller to help you with those expenses. From the moment that you submit your offer to the seller, you can ask them to help you with those expenses. And right now in 2025, it is extremely common that sellers are helping buyers with their closing costs. So make sure that you always look at your options and that you submit your offer strategically to save as much money as possible. $10,500 is a lot of money for closing costs. And what does that even mean? What goes into this closing cost? So let me break down what this $10,500 will cover as part of your closing cost. Your closing cost is going to cover lender fees. These are the costs that your lender is charging you to create and manage your loans for you, which include origination fee, underwriting, and processing fees. The origination fee when you're shopping for lenders can change from lender to lender. So if you are shopping with different lenders, this is one of the things that you want to compare as far as how much each lender is charging you for the origination fee. Closing cost is going to cover title fees. Title fees include title search, title insurance. This protects you against anyone else trying to claim the property, especially after you've already bought the property. So the attorney can find if there are any liens against the property while you're buying the home to make sure that the title is clean and clear for you to be the only owner. Closing costs also include prepaid expenses, which include homeowners insurance, mortgage insurance, and property taxes. These 3 things are paid upfront for 1 year, which are already, again, including your closing costs. This money will go into an escrow account so that the lender can pay for the taxes and insurances every year from your escrow account. So once you get your mortgage monthly payment estimate, that is including your principal, interest, taxes, mortgage insurance, and homeowners insurance, is already included in the amount that you're paying every month. Your closing cost is also going to include any government and recording fees. For example, transfer fees and recording the deed. Basically, these are the costs of legally transferring the property to your name. So when you think closing costs, don't just think, where's this money going? A random chunk of money. There's a whole mix of legit services and protections being paid for. And every one of them play a role in making this home yours. There are also upfront costs that you can expect. And these are costs that buyers can often forget because they are paid upfront. So you are going to need money upfront for your home inspection, which usually costs between $450 and $600. An appraisal fee, the lender may include this in your closing costs, but it is paid upfront with most lenders, and that will cost you between $500 and $700. You will also need to submit earnest money, which is normally 1%, and this tells the seller, hey, I'm really interested in the property. Please take it off the market. I want to buy it. That 1% of the purchase price that you submit as your earnest money will go towards your down payment on the day of closing. And if you're a parent or planning to be, we don't have time for surprises. So you want to know all of your numbers up front, including your monthly payment breakdown that you can get from your lender. So if you're making big decisions, it is very important to prepare and know your numbers to eliminate any kind of stress in the home buying process. So here are the documents that you need to prepare that the lender is going to request for you in order to get your pre-approval. They are going to need your last years of W-2s, your last 2 months of bank statements, your last 4 check stubs, and of course your ID. If you're self-employed, they are going to need your last years of tax returns. These are the basic documents that the lender is going to need for you. Depending on your situation, they are going to need more documents. For example, if you own a second house, they are going to need information about that house. However, these are the documents that you can gather to start the process. After you submit your application, they will let you know what else you need. And this is something that most buyers miss or is a little bit confusing once you start buying a house. The lender gives you a pre-approval with all the documents that you submitted. It is extremely important to know that once you have this pre-approval, the lender still needs to verify everything that you have said and submitted to them. So once you go under contract and submit an offer, there is a contingency within the contract that gives the lender time to verify all of this information that you have submitted and request any additional documents that they may need. So once you go under contract, your loan officer is going to submit all of your documents to an underwriter. They are going to review everything and request any additional information. This is normally done within that financing contingency. And if we need to request more time from the seller to verify everything, or if the lender's needing more documentation, that will be done. If anything changes, or the lender cannot verify something, or the lender is not able to fully fund and approve your loan, you will be terminated the contract during the financing contingency to get your earnest money back. But it is important to know that the lender is still going to need more documents from you, even after they give you this initial pre-approval. So now you know it is not about being rich in order for you to buy a home, but you do need to be extremely prepared. If you are in the Atlanta area or Metro Atlanta area and you are thinking about buying a house or just have any questions about the buying process, I am happy to meet with you and help you understand the buying process. Thank you so much for watching, and I will see you at the next video.